What's up guys, it's your boy Bal Trader here. Today in this new video we will discuss why it is important to select the right time frame and how to do that. But as always, we will start with tech analysis of our first trade. And our first pair is Euro to British Pound. We are investing in the price decrease after the rollback from support level. Let's switch to broker and open a deal for 100 with 4-minute expiration. And back to the trading view for more detailed analysis. At the beginning of the day, the chart was working in a sideways movement on level but low volumes. After that, the support level was broken and the market was actively saturated by the buyers. This led to the formation of a bullish trend. The new movement was reached its peak and the local new price maximum was formed. At the top of the trend, the chart moved into a corrective sideways movement where the price reversed from levels and there was no clear preponderance of one of the market participants. After one such reversal, the price began to fall due to activity of sellers in the market and decrease in the buying powers of buyers. We and you are working on the continuation of this collapse in the price to restore the previously work flagged. I expect a move down to the previously established level of support, so let's go back to the broker to watch the trade close. In technical analysis, the term time frame refers to the time interval that defines the grouping of quotient when constructing a price chart in the form of bars, candlestick or line chart points. This parameter is of key importance in any successful trading strategy. All time frames are conditionally divided into three groups: short-term, period from M1 to M30, medium-term from H2 to H4 time frames, long-term intervals from a day to a month. The candlesticks of the higher time frame contain information about the candlesticks of the lower time frames. These time frames are characterized by trading strategies that have a similar gradation. When we change the time frame of the chart, we got information about the trends of different levels. If we use a short time frame, the trends will be local and change several times a day. Long time frames display information about global trends which may take years or even decades to form. The amount of your profit depends directly on the selected time frame. Let's make a small stop here because I have a really important information for you. If you are looking to take your binary options trading to the next level, then connect to my private channel for exclusive access to my personal mentorship, lots of trading sessions, individual feedback, and more educational materials. By joining my private channel, you will receive invaluable insights and guidance. You will have access to the live trading sessions where you can trade side by side with me and learn from my strategies and techniques. In addition, you'll receive individual feedback and support to help you identify areas of improvement and refine your trading skills. To join my private channel, simply send me a phrase, "I want some honey," in my personal Telegram. The link to contact me you will find in the description down below or in a pinned comment. So, when choosing a time frame, you need to consider some factors, which we will now look at in more detail. If you prefer short-term time frames, you need to be ready to react quickly to changes in the market situation, because the price can change very quickly. In this case, you must be prepared to react quickly and have a certain level of skills and experience to correctly interpret and use the signals received from the charts. As you can see, we got a price rollback. Therefore, we will use a 200 cover with a 2-minute expiration on default. And let's get back to the time frames. In addition, when choosing a time frame, it is necessary to consider indicators and other technical tools that are used in trading. Some indicators have a period setting which determines the time interval over which the price is analyzed. Incorrectly choosing time frame can lead to incorrect signals from indicators and erroneous decision making. The choice of time frame may also depend on the strategy you are using in binary options trading. For example, the moving averages strategy is often used on a long-term time frames, starting at 15 minutes or more. On the other hand, a moving average strategy may be less effective on short-term time frames where price can change quickly. Let's collect our first loss for today thanks to our cover and move on the analysis of the next pair. And the next one is Euro to US dollar. We are investing in the price decrease from the support line. So let's switch to broker and open a deal for 100 with 4-minute expiration. Head back to the trading view for more detailed analysis. On this pair, we observe the movement of the chart in a uptrend, with a good saturation of the volumes on the part of buyers. I want to draw your attention that the fall in the trend is weak and more often there is the development of the resistance line. After the buyers forces exhaustion, sellers took more dominating position and then led to a corrective sidewall, after which buyers tried to go up, but the volume was not enough and the price collapsed. On the decreases of the seller's activity, a new support level is formed, and the price low is updated, from which the price reverses and starts the reversal growth to restore the previous positions. Reaching the previous established support level, which is now resistant, the chart was already made a pullback and the price continues to fall. So I expected a further decline, on which we open a deal. So let's get back to the broker and look how the price is changing. In general, the choice of the time frame should be based on the analysis of risks and potential profitability, level of skill and experience, as well as consideration of strategy and indicators. It can be a complicated process requiring constant learning and market analysis, but choosing the right time frame can lead to significant profits in binary options trading. The choice of the time frame also depends directly on how easy it is for you to deal with noise filtering. This can be a difficult task, but there are several approaches that can help reduce its impact on trading. First one is using different types of chart. For example, candlestick charts can be cleaner and easier to analyze than line charts. Second one, use indicators as they mathematically smooth out all the breakdowns and divergences. Third, use an economic calendar. When you keep track of news and events that can affect price movements, it can help you avoid trades during periods of volatility. But it is important to keep in mind that it is impossible to completely eliminate noise in the market. So it is important to have a good risk management strategy and not to place too many trades in periods of high volatility and noise. Don't forget to subscribe to my channel if you are not. I'm regularly sharing lots of useful trading tips and knowledge, so you better not miss it. And by the way, in addition to educational training videos on YouTube, I am also writing educational articles in my open Telegram channel. In this channel, you can find not only articles, but also useful literature, educational posts, and videos. In addition to all of these, I am running trading sessions with participants of this open Telegram channel. You can find the link to join it in the description under the video or in a pinned comment. It is about time we got our 2 classes together for today. Thank you all for watching this video all the way to the end. Don't forget to subscribe to the channel, like, and of course write the comments. See you in a while, have a good one, bye.